Welcome back to Switzer on Sky News Money. Brambles reported today and the market liked what they saw, the stock up 8.5%. So how come this company is on a roll and can it keep rolling higher? The company's CEO, Tom Gorman, is very bullish on his company and he likes the outlooks for the USA and Australia. I caught up with him earlier in the day. So where has the company performed the strongest?
You know, we have three basic business unit divisions. We have a pallets group, which is really focused on fast-moving consumer goods. We have an RPCs group, which really focuses on produce. And then we have a containers group, which has a couple of different supply chains that they service. And without a doubt, the strongest performance really has come from the pallets business. In terms of both top-line growth, we've been able to drive growth, you know, and frankly, in a set of macroeconomics that are, that are fragile in some cases and questionable in others, we've shown an ability to grow the top line of the business. And more importantly, we've gotten great profit leverage to that. And what I mean by that is that our profit growth has exceeded our top line sales revenue growth. So our overall performance, 8% sales growth, 10% profit growth, has really been driven by the pallets business. And the pallets business represents about 75% of our total company.
Does pallets growth give you a sign about growth? Is it a good indicator?
Well, I think the first thing that it actually shows, Peter, is the resilience of the underlying demand for our industrial services. Remember, the pallets business is really driven by fast-moving consumer goods. And that's driven by, what do people buy when they go to the grocery store? So it's around food, beverage, pet care, personal care products. It's that sort of product that we're really moving to market. And the key thing here is that, sometimes people call it a defensive space that we're in. Sometimes we call it resilient space. But you don't get a lot of volatility of demand in that particular set of products. And we benefit from that for sure. So even when economies are tepid in a way and growth is not overly strong, we still see growth in those verticals, and we've benefited from that. So when we look at our business, we tend to view it in three different buckets. We look at organic growth, what some might call like-for-like growth, and we're seeing organic growth in the U.S., we're seeing good organic growth in Europe, and we're seeing strong organic growth here in Australia. So just to give you three examples, we are seeing that growth. The second thing we look at is price and mix. Are we getting price in the marketplace? And I have to say on that, it's a mixed bag. In Europe, there really is no price for us. Our pricing in the period was essentially flat. We got a little bit of favorable mix and price in the U.S. and a little bit of favorable mix and price here in Australia. And then the third category is what we call net new wins. How are we adding new customers to our business? And there, the standout for us was really the U.S. The U.S. market, of our 7.5% growth in the U.S., almost a little bit more than half of that was because we've added new customers, and that's very pleasing. So when you get the combination of new customers and a little bit of price, you can live with an organic environment that's not that strong.
Your report refers to constant currency. Has currency been important to the bottom line?
Well, I think, first of all, we really need to explain currency in a Brambles perspective. And, we're similar to some other companies that have reported, like to take Amcor, for example. We are a company that reports in U.S. dollars. And why do we do that? Because, first of all, the U.S. dollar is the largest component of all of the currencies that we work with. It's about 40% of our revenue, so by far the single largest. If you compare that to Australia, Australia is less than 7% of our revenue. So the right currency for us to report in is U.S. dollars. The second thing is that when you then translate all of the other revenue and profit back into U.S. dollars, you get variances as those currencies move. Over the last 6-month period, I think everyone knows this, but the U.S. dollar has been very, very strong. It's important to remember with Brambles, though, that this is not transaction exposure. So what I mean by that is we don't acquire in U.S. dollars and sell in Polish zloty. That's not what we do. We really have just translation, not transaction exposure. So we don't have cross-border movements of product in mismatched currencies. So it's really translation. It's taking the performance in Europe and translating that from euros or pounds into dollars. So it has affected our reports, But that's why we focus on looking at constant currency performance, because there's really no economic impact to the translation effect.
Well, Tom, you've raised your guidance from 6 to 8% to 8 to 10%. What's going to explain that?
Well, first of all, we've had a good first half. So I think we just have to deal with the reality that's in front of us. And we said that, you know, on a constant currency basis, we thought that we could grow both revenue and profit in the range of 6 to 8. And clearly we've beaten that in the first half. We've grown at 8 and 10%. And when we look at the second half of the year, of which we're already 6 weeks through that, we see that level of performance continuing. And our ability to continue to win customers, our ability to deliver efficiencies as a company is very strong. And so our outlook remains positive in the second half. So we think it's the responsible thing to do. You know, Peter, we take our guidance very, very seriously here. You know, the whole time I've been CEO, we've never missed our guidance, so that's a big part of what we want to do. We want to communicate accurately to our investor base. And it's the right thing to do given the strong first half we've had and the projections that we have for the second half. We're comfortable that we'll be able to grow our business in the range of 8 to 10%.
You've already said that the US is your most important market. So what's your best guess in terms of where the US economy is heading?
This is a phrase you're probably not going to like, Peter, but we're cautiously optimistic. I mean, it's a big market for us. As I said, the U.S. alone is 40% of our revenue. So it's critically important to us that we're successful there. We're doing a lot of things that we can control, though. We're making our business more efficient every day, and those are things that we can control. If we get some organic tailwinds, that only helps us even that much more. And we do remain optimistic about the outlook for the U.S.
Okay, that's the US. So what's your outlook for the Oz economy?
Yeah, you know, it's a funny world that we're in at the moment. I mean, I think there's like a financial sector that wants to be very negative, and then there's what people refer to sometimes as the real economy. You know, businesses that provide services and that make products. And again, here, when we look at Australia, you know, we are relatively optimistic here. We had strong organic growth in the first half of the year. Our Australian business, I have to say, is very, very well run. It's a very efficient business. And we see a positive second half as well. And that does play a role in our lifting overall guidance for the business.
Well, Tom, you know, you operate in the real world of Brambles, but of course you have to deal with the unreal world of financial markets. Do you get frustrated when you see what financial markets have done this year when you compare it to the fundamentals that you're seeing in your own business?
You know, look, I'll tell you, you know, when I became CEO, I said that I would never worry about the stock price. You know, I said I would worry about, you know, our customers and our employees, and if we did the right thing, the share price would take care of itself. Having said that, I know the stock price every day, right? It's just one of those metrics that I'm on top of. But I will say, though, that if we do the right thing for our customers and we look after our employees, the performance of the business will follow. And I think that's exactly what we've been doing. Our strategies are long-term in nature, and you have to stick to it. You know, you have to deliver your commitments. We hold that very dear as a part of our culture. And the more that we deliver and the things that we do that we say we're going to do is very important to us. And we would deliver against that, and we produce the results as we produce today, as we're showing and sharing in the market today. Eventually the market will catch up for that, and the stock price will reflect the underlying strength of the business. There is a lot of volatility, and it's not just the Aussie market. There's a lot of volatility in equity markets around the world. If we were to worry about day-to-day volatility, we would take our eye off the customer. And the moment we do that, the day that you and I have a conversation and I talk more about our stock price than our customers and our employees, the business is heading in the wrong direction. So, you know, I don't want to be so flippant to say it'll be what it'll be, because it's important to us, and our shareholders are very important to us. But my job is to run the business properly, and if we get the right outcomes, the share price will follow.
Tom, tell us about the BXB digital story that was released today.
So we made 2 additional releases along with our earnings, and one was a new enterprise which we're calling BXB Digital. We have been looking at the Internet of Things for a long time in our company. For the last couple of years, we've been looking at ways to take the valuable data that we have. You know, we have 500 million assets around the world, and there is information and data tied to each one of those assets. We've been looking at that And we've been combining that with the ever-evolving and development of track and trace technologies. And we've done some projects, Peter, where we've instrumented our assets so that they can provide real-time information to us. In addition to telling us exactly where they are, we can get things like temperature, we can get things like impact forces, how hard were they hit. All of that information is important to us internally, because if we know where they are, we can collect them a lot faster, we can get them to be revenue generating faster, we can reduce damage and loss, which obviously impacts our financial performance. But also, the other information is valuable to our customers. So you think about an automotive customer that wants to know where their components and parts are in their value chain all the time. You know, they're just-in-time or JIT factories. The more they can reduce their level of inventory, the more efficient they can be. And if we could tell them at every point in the process where their inventory was, they could be more efficient. So that's one idea. Customers that ship frozen products, when those products break the cold chain, that's important information. If we could provide that to them, we become more valuable to them as a partner. Now, these ideas, frankly, are ideas today. We got to get the economics to work. But we've hired an individual who's presently running innovation and the Internet of Things for SAP. His name is Prasad Srinivasamurthy. He'll be joining us in mid-March, and he's going to establish a small office for us in Silicon Valley. We're going to populate that with some outside experts in data analytics, combined with our own experts in logistics, and really, for the first time, consolidate all the efforts that have been underway as a company and see if we can build an opportunity here going forward. It's a very, very exciting initiative for us.
So ultimately a potential source of revenue in the future if it pays off?
Well, fundamentally, that's the idea, you know, both an internal customer group and an external customer group. Internally, it's about the issues I mentioned, loss, velocity, and damage. And externally, it's about this concept of taking data and information and providing insight to the customer. Okay. If we can do that, it's a home run.
And you also revealed something else today about a key person leaving the business.
We haven't lost him yet, yeah, we announced this morning that Zlatko Todashevsky, who's been the CFO with me for the last 3.5 years, has really decided to step back from corporate life. I don't know if you've gotten to know Zlatko, but I'll tell you there's no finer guy that I've ever worked with. Not only is he an outstanding professional, his work ethic is really monumental. He's an exemplary executive in my view, but he has a very young family, and Brambles is a global company. And as I mentioned, you know, we only have about 7% of our revenue here in Oz, so spend a lot of time on the road. And you know, the challenges of being away from, you know, from home and loved ones is difficult. He's got 2 young twins, and he wants to step back from corporate life, and nobody understands that better than I. Very sorry to lose him, but we're respectful of his decision, and he's not leaving tomorrow. He's going to work with us over the next year, and we'll find the correct replacement for him.
Tom, thanks for joining us.
Pleasure, Peter. Thank you.